Good morning, friends. This is Daddy Day Trader with a new hat and an accountability series update day 39. This was from my sister, so thank you, sister, for getting me some sweet Daddy Day Trader swag. I appreciate it. I'm not sure if this will be my red hat day or my green hat day, but it's going to have to make its presence known. Um, so my last update was on the 19th, which was the day that the market was closed. But I had have I had quite a few green days in a row. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13 green days in a row. So that was pretty good. I was feeling confident. And then go on the 20th, and I didn't do so well that day. I I lost $348 that day. So that was a rough one. But I then went on to make up about $150 of that on Wednesday, Thursday, and Friday. So on the month, I'm up $190 total. So that's pretty good. There's one, two, three, four more trading days. So we'll see how we do. And I put my account above 25,000 so I can trade. Um, since I'm before I was doing low float penny stocks that not penny stocks, but some of them were. So they ranged from like 20 cents a share, maybe to like $20 a share. That was kind of the range. So having like $20,000 account and trading stocks of that value, you could do in a cash account and still take decent size. However, since I have been trading Nvidia and SMCI and Tesla and Amazon and stocks that range from like $20 to $1,000 a share, having a cash account is difficult because you can't take very many trades. You can take maybe like one share, and then you can do that like 5 times, and then your cash account is half gone potentially or whatever. So I found that I was not able to trade enough with these higher price values. So I put my account back up above the PDT level of 25,000 and activated the margin no settlement functionality. So what that means is I can uh, instantly settle my funds after a trade. So if I trade $1,000 for on a share and I sell it, that $1,000 goes back into my buying power, and I don't have to wait 2 days for it to come back. So that's been helpful for uh, trading those larger share counts. So I can trade a little bit uh, more times throughout the day, not just run out of buying power super quick. So we'll see how that goes. I mean, that's a double-edged sword. It can be sort of dangerous to have that activated because it gives you the ability to trade basically as much as you want without running out of buying power. So I need to really like be disciplined about using that. It's like, with great responsibility or with great power comes great responsibility or whatever. So I got to kind of live that and keep my risk management in mind. So that's the plan, is to see how it goes with this new buying power. And I had a margin account previously, but it went below 25,000, and then I had to change it to a cash account in order to use it as a day trading account. Otherwise, it would have got flagged and put on pause. So we're gonna. It was a crazy week, right? I mean, there was large cap stocks making huge moves, 30% moves. Carvana was Friday. I traded that one really well. I've been noticing a market open breakout. Not sure what the official term is, but basically, like for Carvana, And all the other stocks that have been doing gapping up that are large cap stocks, I've been noticing there's a big sell off right when the market opens. So in the first minute, it goes way down $2 or $3 potentially, and then with volume, it goes up. So Carvana, I think opened at like 66 or something like that. It immediately went down, and then as it was coming back up again, I bought in at 67, bought 20 shares, and it just went up from there. And I sold out at 69, and it then went up to 76. So I sold out way too soon, obviously. But at the same time, I had bought some SMCI. I had bought two SMCI shares pre-market, so I was distracted with those because those were kind of bouncing all over the place and they had gone down. So I was distracted with my SMCI shares, even though I knew I was waiting for the Carvana open because it had gapped up like 25%, I think, pre-market, and then it went up another like $10 from there. So a note to self is to like, if you wait an hour and a half for a setup to happen, which was Carvana at the open, don't take a trade on SMCI 2 minutes before the open. Watch it tank, uh, get distracted, and then not trade Carvana well. Because what I did was like I bought Carvana because it was doing what I expected to, and then I saw SMCI was like jumping all over the place, so I wanted to get back to that one and trade it. So I had to sell my Carvana because I didn't want that to become a loser. Anyways, so just kind of trading more than one stock at the open is a bad idea. Now, maybe trading more than one stock later on after the open might be okay because it's a little slower. But when you got SMCI going up $50 a share in like a minute, like you don't want to be distracted. And you've got Carvana. If you're buying, I bought 20 shares. What's that? 20 times 67, $1,300. Uh, so anyways, I made $25 on Carvana. Let's see what my totals were. Made like, $25 on SMCI, and so it was decent. Less. Again, it's been crazy, right? Like we've had this bull market sort of going up and up and up and up, except for obviously last Tuesday everything went down. So I mean, had I held my stocks till Friday, they all probably would have been positive. But I try and it was. I mean, I also traded some small stocks, some small caps, which I shouldn't have done on Tuesday, which got me to that $340 loss. I think I lost $53 on SPRC, and then let's see, yeah, I lost $8 on meds. Both stocks I was up on initially, and then I just kept trading them, and then those are the small cap ones that move quick. So not too long before I lost some money on those, and then I lost $72 on Applied Materials because that one kind of was popping up, and I bought it kind of at the all-time high, and then it went down. Same with Tesla. So, anyways, some bad trades. I should have cut them sooner instead of risking. I should risk like only $20 on a trade, not 70 or whatever, or 100. But had I held on to my SMCI share, I would have been. I could have sold out on Friday and been green, but you don't know these things. And what I need to do is cut sooner. As always, I'm still working on that. That's crazy, right? Like, how are you still working on something that you've been talking about for months and months and months? That's that psychology of trading. But I'm gonna. After this, I'm gonna pop open my Trader View, which has a new look now, and I'm trying to get used to it. But show you my month so far trading large cap stocks, and we'll see how it goes. So stay tuned for that. I'm excited to kind of reveal that progress. And it's my wife was talking about this new book she's reading from the author that wrote Sapiens, and she was talking about the dopamine hits that you get from life, and especially with, you know, things like gambling, things like drinking and drugs and uh, adrenaline junkies and day traders, that we go in and we're hunting for that dopamine fix, which is true. I mean, it's not, if day trading was, or even swing trading was like super boring for me. I know it's probably boring for some people, but I wouldn't do it, right? There has to be a level of excitement to it for you to stay interested, I feel. So there will be dopamine hits happening, and then it's like, what do you do with those? Do you let it take over and become unhealthy, or do you like harness it and turn it into something great and enjoyable and fun and a business? Because like I've always dreamt of finding something that you can do to make money and enjoy at the same time. And I think I've arrived at what that could be. Now it's just a matter of, does my personality fit with the market and trading and day trading, swing trading, whatever it may be. I mean, I've been doing it for a year straight, plus a few months now. So it's a significant investment of time and money. At some point, I want to do like a true recap of like how much I've spent on training and losses and gains and software and chat rooms. And, at this point, it's really just a hobby that I'm losing money on. And I'd like it to become a business that I can make money on. I remember taking a social studies class or something like that when I was in high school. I think I was a senior, and we did like we had like a 1 week session on like stock trading, and that was back when stocks were still in the paper and you'd have to like track them by the day. I'm sure they had more sophisticated tools, but not available to high school kids. And I didn't really get it then, and I never really. I mean, it was kind of cool, but I didn't really understand like how people would make money doing this because it seemed just so like slow. Like you check that paper every day and make stock trades on that. Like how's that work? But nowadays it's obviously much different with hedge funds and quants and uh, and high speed trading and all sorts of things. Like there's a lot of volatility now, which is good and bad. So I'm excited about the growth that will happen this year in my trading. And as we talked about, like this is a 5 year path, right? At the end of 5 years, if it's not profitable and enjoyable, then you stop. And then like, okay, you gave it your best shot. Now you can invest in VTSAX and find a different way to make money. Maybe that is just going back to a job. I mean, I have a job right now, but it's not, doesn't take much time of my life. It's only a few months. But I'd love to make a go at making it a modest living off of day trading, with the possibility of kind of having like a no ceiling in sight. I kind of see it like as like a salesman, like however much effort and hard work you can put in, there's no cap. I know there's a cap, but realistically for us, there's no cap. Like you could make millions. Slowly building to that, obviously, and slowly building up your risk tolerance and your share size and your individual size. So, but it has been nice not having to worry about the cash account and your buying power. That's been cool. Again, I think it's kind of like I need to say it out loud so it sticks in my head, but it's dangerous to have that ability. There's no end in your trading unless you like can stop yourself, because sink or swim, TD Ameritrade isn't going to stop me. They're going to let me use up. I could use my entire account balance and lose it all. without stopping because there's no guardrails with that type of account. So it's scary to say that out loud. So I'm glad I did, and hopefully that'll stick. I did find myself cutting trades on Thursday and Friday. I didn't want to cut them, but they were going against me, and I did, so that was good. And I need to keep doing that. So I mean, yeah, no, it's been good. I've been enjoying the new trading of the different types of stocks. It's nice when you buy in to a stock and it doesn't immediately flush to 15%. I like that. It was hard trading SMCI because the spreads were like $3 or $4 at sometimes. So you'd buy like 5 shares, and then at the ask, and you'd instantly be, at least your P&L would show you're down $30, like right when you buy in, and that was a little bit difficult to see because then it's like, okay, now this thing has to go up like $6 before I even make any money. Now I know you can sell on the ask sometimes, but if it's going the wrong way, then you can't sell on the ask. So also with the new account that I, not the new account, but the account updates that I made, I can short stocks, or at least whatever is available to short on Thinkorswim. And I never thought I would like want to be a shorter of stocks, and I certainly wouldn't short those low float stocks. Absolutely not. Those are too crazy, and unlimited risk on those for sure. I would consider doing like a short term short on a large cap stock during the day that had reversed and was showing a downward trend. Um, like SMCI was a great example. On Friday, it went up to like $995, and then it, straight up right at market open. Then it went straight down, $200 a share or whatever it was. And I have like some of my concerns were that with the bull market, buying long makes sense, but how was I going to make money with these large cap stocks in a bear market if things were just going down every day, and I can't short in a cash account? So it was nice to think about, like, okay, now if there's a bear market, you still have an opportunity to just like, and I know it's probably not exactly like this, but flip the whole like long model into the short model. So using all the same indicators, you just, you're buying in when they're peaking instead of when they're like coming back up again. So we'll see. I mean, that's an interesting kind of thing. I like it. I found that I was trying to do like a one share where you like buy long and then reverse it as it's coming down, and but I found like that wasn't really working too well for me because I'd buy long, and then I'd buy long, it'd go down, I'd reverse it, then it would come back up, and I'd buy long, and it would reverse, and I'd buy short, and it would come back up. So that was the whole the Thinkorswim has like a reverse button that just switches your position from long to short or short to long, which in theory is pretty cool. But yeah, it's funny. Like the way I trade, I should be like the best shorter in the world. Like I lose all the time. So, but I know if I start like shorting stocks, they're all going to go up. So it's just like one of those things where you can't think the market's against you. You can't take it personal. It's not. It's just you not trading with proper parameters. So some new functionality in my trading journey, stuff that I've reactivated. Um, about this time last year is when I lost one day. I had my biggest loss, and that's when I switched my account back to a cash account. So it's been a year since then. We'll see how it goes. It's interesting with the market the way it is right now. I feel like I'm not ready to take advantage of this bull market by increasing my size, and that's kind of saddens me because it feels like all of last year, with some exceptions. There's opportunities every day, right? But I feel like a lot of last year I was focusing on small caps, and there wasn't a ton of like volatility and huge gappers all of last year in 2023. There was some, but if there's like 10 all year and you're in there for 250 days trading, it's like basically none. And I wasn't, on those days when there was opportunity, like I wasn't ready. Like, you go 3 weeks with nothing and then suddenly something pops up, you're not going to trust it. Like, you're like, there's no way this is going to go up 600%, whatever. And then it does and you miss it. Um, so anyways, I'm rambling. I get that, but I'm trying to get out all my thoughts and I haven't been doing my daily updates. So this is kind of like, 5 days in a row of updates for you. But I have like my stalwart list of possible long plays where I'm really looking for a cyclical downturn or a stock that gets beat down unnecessarily, like Meta last year. It was up at like $400, right? And then it had a few bad earnings calls where they were burning through cash quicker than expected or whatever the case may be. And then it goes down like 25%, 25%, 25%. I bought it at like $200. It goes down even more. I sell it for a fat loss. Goes all the way down to $85 or whatever. And then it starts to turn. And then it goes up to $490 or something like that last week or 2 weeks ago. So it went down to $85. It IPO'd at like $40, I think. I think it went down to $17 after its IPO. So this thing went from $400 down to $85. Now, how do you buy that like bottom? You don't. You really have to look for that trend of the reversal. So like when I was looking at some charts and things, it looks like when it went down to 85 and then it came back up and it hit like 115, all the kind of indicators were there to show like, okay, this is a proper reversal. So maybe you don't get in at 85, but you get in at 115, you're still up 400% almost, 300%, 350. So long story short, those are also the kind of plays I'm looking at. Like I bought some UPS at $139 and then it went up to $149. So that's pretty cool. I only bought 4 shares, but so adding that sort of functionality and then maybe buying some of those undervalued stocks in my retirement account too. So my goal is to like use my taxable account to make our spending money for the year, like our base spending needs, and then to switch over to my Roth and trade in that. And when I make day trading like $100,000 or whatever, that's my Roth basis. So if I can make that in my Roth account, I would then distribute my basis from my Roth account after I've replaced it with new money. So not just taking it out, but maybe I make 100, I'll take out 25 or something like that. And that's tax free, and that can come back to us personally. I've already paid tax on it, so I'm really just getting my money back out, but not diminishing my Roth account, keeping it where it was. And then the idea is to grow the Roth account and kind of invest in VTSAX with the profits. So make your spending money in your taxable account, keep it reasonable, and then make even more money in your retirement accounts, avoid taxes, build up your Roth. So that's kind of like the long term when this goes. And Could be 5 years out. We're not sure, but I know the market's really hot right now. S&P's at all-time highs. I know that's not going to last forever, so I'm interested to see where we go from here. What's going to happen next? So, all right, let me load up my trader view, and I'm going to go through my month to date so far and show you guys where I'm at. And thanks for listening to my ramble. I know it's been a while, so appreciate you guys. And we'll be back. Take care. All right. So here is my trader view. All my trades are downloaded from Thinkorswim, and they're input in here for the month, for the year. And so new view, trader view, I guess, has updated their look, which is something I'll have to get used to, but I kind of like this. This is cool over here. Have like a week total. I like that a lot. As you can see, doing pretty well. Doing these like, large cap swing trades, hitting some pretty decent numbers, and then having like a big roadblock on the 20th, taking all my profits basically. I mean, I think I was green on the year until this day, and then this put me red on the year again. So that was a sad revelation. And it's because $200 of it was SMCI, which is crazy because like and that was one share. I mean, I was kind of pissed every single day. I've been trading that thing since like months ago. It had gone up like almost every single day, and then I grabbed one share and the thing like dumps from 1,080 all the way down to like $700, and I got caught in that flush and didn't. I mean, I had all the time in the world to sell it with a smaller loss, but I didn't think it was going to do that. Like, and that's the problem with my mentality is like expect the unexpected, because that's what could happen. Now it's unlikely, and then the stock rallied all the way back up past where I had bought it on Friday. So like 3 days later, it was already ahead of where I had bought it. So now I did trade it between now and then, but I didn't make $200 on it, so I haven't made up my loss on this MCI. And then I had some silly trades like on MEDS and SPRC or whatever that one was, and lost money on those. And those are those ones that are gapping up like 200% in one day. So those are kind of the risky ones. And why I traded those, like I think I just I was feeling pretty good about the bullishness of the market, all my green days in a row, and seeing these like breakout patterns where they're greens and just like kind of buying in as they're breaking out, and then selling out pretty quick and just making a couple bucks. So, and again on SMCI that day, I had made $30 and I went back in and then I lost a bunch. So also on meds and SPRC, I had made money. I was green and then dipped back in and lost. So don't turn a green trade into a red one, I guess, or at least don't turn it into like less than zero, which is what I did on 3 stocks, unfortunately. And then I had some other stocks that I was holding on to, like Tesla and AMAT, that I had bought in previous days and then sold them on the 20th. So those kind of compounded all my losses together to have a negative 348 loss day, which is like unfortunate, but if my P&Ls look like this, ongoing, then it's fine. Now, what's nice is that all those losses I could have trimmed quickly. It's not like those were avoidable. I didn't buy huge size and get stopped out and lost $340 on like 1% of my trade. It was stocks that I held too long and let go too low, and then I had to acquiesce and capitulate to like, okay, enough is enough, right? And then, as we know, they just go right back up again after you sell out. So, still need to be ready to like buy back in. But, anyways, so avoidable losses and more risk management and not letting yourself kind of like get too cocky because I was feeling pretty good. Like, I can't miss. It's going really well. Look at all my green days. Look at all my green trades. Like, doing really good. Um, so luckily, like, you know, I trimmed my losses for the week down to 200, and my previous 3 weeks certainly make up for those. So that's cool. And it's interesting, like the way I feel about this month is like I don't feel that great about it. Like I guess I feel a little disappointed, probably mostly because of the 20th. But like I should feel really good about this. Like this should be a great. This is a. I don't think I've had a month, and the month's not over yet, so I should be very careful what I do the next week. Um, because it could, $188 isn't a big slush fund to draw from, so it can easily be given up next week, and I am going to double down on my risk management so that I don't do that. Anyways, so I should feel really good about this, right? Like before, let's see, let's go back. So this is January, trading pennies, trading low float gappers. Like look at it, 9 -3, +5, -8, -10, -13, -4, +1, -10, -3, -1, -12, +27, +1. I mean, the numbers are like, and this was me trading, like seriously trading, like doing my trying really hard to like trade well, and then you go like, oh, $205 loss. Okay, well that sucks on a ITRM, whatever that is. No one knows anymore. It's probably bankrupt. Uh, and just like clearly over traded that day for sure. How do you go back? This is all new, so let's see. I guess I'll just hit this button here. Anyways, so I mean, this is me trying my hardest and making some missteps, but missteps are going to happen. But trying my hardest to trade low float penny stocks that are gapping up, sort of like doing my best, and just sad, really. Like this is not something that you can lever up on. It's way too volatile. So then we look at, okay, the 31st is when I had like my revelation. I wanted to try something different, something less volatile. So that's when I switched to large caps, just trading similar like setups and using similar indicators like VWAP and MACD and RSI, sort of as guides, and and then building my long-term portfolio to look at. And then we can see like, okay, now we're in the next month, and barring this day here, like solid numbers. Like I'd be happy if I made $500 in a month. I think my best month was, let's see. No, how did we get to 2023? Clear that. Maybe, was it May? No. April? No. June, I think it was June. June? No. Oh, this one looks pretty good. July. Nope. August. Okay, there we go. All right. So August of 2023 was like my first month where I traded well. I traded pretty consistent. We went on like vacation, so I missed quite a few days, which is probably the reason why I was green, honestly. And had some decent green days, like the highest green day at $92. Okay, can't promise you that that was legit. Let's see, TTOO. I think that was a penny. Clearly, I took 13,000 shares, so yeah. I mean, I think I was, yeah, probably triggered that day, but went in my favor for like the first time ever. So anyways, like my best month ever to date was $247 in August of 23. And then I was feeling pretty good. And then I go into September and lose $807. Yeah, sad. I'm going to October. Oh, October was green. Good for me. $37. Okay. And then November looks real bad. Yep. 281. And we go into December. Minus 46. Okay, not too bad, not crazy. And then we go into January. Now we're in this year. Minus 212. And now we're into this month. And if we can break 250, so let's see, I need $60 next week. And that'll be the best day of my trading so far. So I'm not gonna put that on myself to do. I'm just gonna see what happens, but I'm gonna continue trading with respectable size. I have a little share calculator I've been using, and what this does is it just like helps me calculate like how many shares I can buy with and lose a certain dollar amount if I can find like a decent resistance level. So sort of like, and I hadn't done this before, but like, okay, if you want to lose $20 and this is how far you think the stock can go down, this is how many shares you can buy. And I think that's pretty a neat way to do it. And I had heard about it before, I just had never implemented it. So, and then you can set your stop and then not step, and then if you wanted to set profit targets, you can. So yeah, so this has been my month. And it's interesting, like all these days are bigger than any of the green days I had, like in January, trading those low floaters. So, and this is trading, not crazy size, like $1,000 share purchase. So, sometimes it's like 8 shares or 7 shares or 2 shares or 1 share. Like that's the kind of lots I've been trading. And I think like if I can get better at this, like that's a pretty solid. You can lever that up. So, like if just as an example, Like if I was, instead of $1,000, I was trading $5,000, which, that's what down the line quite a ways. This would be a 5x, and everything, all else things the same, this would be 5 times what it is now. So what's that, $1,000? So now we're talking some money that we can use. And my idea is to like try and keep my day trading account above 30,000, and then whenever it gets um, above like 31,000, I'll distribute that $1,000 out of my account. And so right now I've got like 30,700, so I need like $300 more before I do like my first draw. So let's see if we can get there. And again, that's just more about, and I find like I can see why a lot of people made a bunch of money during like the GME craze. And that's kind of how I feel like this week has been. Like everything just kept going up. So it was like you could just buy and then like it went up, which was kind of fun. Like I can't wait to be a seasoned day trader and then get into that environment. It's going to be sick. Like whatever the next Nvidia is going to be fun. And maybe I'll be more ready to take advantage of it. And then maybe also I'll be more ready to take advantage of like the metas I missed out on, or like even if like Upstart went to like $11 a share, and then it went back up to 30. So like just keeping your eyes out for something that is priced incorrectly. And I believe that can happen. I mean, I firmly believe it. So, and I want to be ready to freaking jump on those things. Like I feel like I'm like taking all the risk and never taking the rewards. So I need to like, come on, dude. Like I've wanted to buy Boeing so many times. Like when Boeing was at like 110, I was like, I should buy this. And that was years ago, but I didn't, of course. Um, Instead, I bought like freaking fiber at like $300 and rode that down. I had Civ, had shares in Civ, I had shares in Invite. Like those are both now bankrupt or gone or whatever. They're pink slipped or whatever. So, and then I sell my meta, too soon or whatever. So, anyways, just got to be smarter. I am dumb money, super dumb money, but I shouldn't be. So, I think it just takes more time. Am I willing to put in the time? We shall see. So far, I have. I mean, I've never gotten up at 5 in the morning or 4:30 in the morning this many nights ever in my life. Now I've done it for like almost a year, getting up at 4:30 or 5. And one thing I've noticed that with this new style of trading, like pre-market trading, is basically like off the table. It's very not enjoyable. The stocks are, I mean, SMCI pre-market was trading like in a 1 minute window. I think it was trading like 100 shares or 200 shares. It's like, do you really want to be a part of that? No, no, no volume. So nothing to keep the stock stable and going in a good direction. So, anyways, that's something I noticed. So maybe what I need to do is, and I spend that time in the morning like looking over my list and putting my watch list together, obviously. And then I think what I can do now too is like get some more exercise in. Because what I've noticed is a lot of the ones that are gapping up that are large caps like Carvana and Square or Block or whatever it's called on Friday did nothing except like right when they had earnings, like they jumped and then they leveled off in the morning. And then when the market opened at 6:30, that's when the volatility came in, and that's when you can make your money. And both those stocks dropped and then skyrocketed back up. Just like every other one this week that was gapping up, dropped, went up, dropped, went up. So, and I know sometimes they just drop and drop, like AMAT. I bought that one too high as I was going into the market open, had shares, and then it just tanked. Never went back up again. So it's not a foolproof methodology, but worked a few times. Anyways, I gotta go to do some tax stuff, and this is gonna be a really long one. So maybe you made it this far, maybe not, but hey, thanks if you did. All right, guys, have a great one. We'll be back. Bye.